Good morning, everybody. Good to be back. It's the live market open for Tuesday. It's February 2nd. We're in a new month and lots of things happen in markets. I'm Yohay Elam, Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. And the agenda as usual, we'll be covering everything, recent developments, charts and levels the next 24 hours, and of course your questions. I see quite a few of you already in the chat room. If you cannot see the chat under the video, please go to the address on the screen, https tlk.io/fxstreet-forex-live-video. Okay, we didn't have a show yesterday, and then we're back to the usual schedule. So we'll begin from Friday's events as well, and let's do a sort of overview of what happened just in the bigger scheme of things, the wider picture. We have a weaker dollar in general, and this benefits most the pound, which is on a recovery path, and the Canadian dollar, which is looking quite strong despite falling oil prices. Oil prices fell once again after that quite impressive short squeeze that we had yesterday. In other news, probably not affecting markets so far, or not affecting Forex at least, we had in the Republican Party, Trump failing on his first test, losing to Ted Cruz in Iowa, and the Democratic Party, the battle between Hillary Clinton and Bernie Sanders is a dead heat tie, around almost 50% for both. And the Zika virus coming from Brazil, is now a global worry after the World Health Organization set the flashing red alerts. And that could, of course, impact economic growth, not only in Brazil, but in other countries. So these are just things to have in the back of our minds. Okay, let's begin a bit with, charts just a bit. Here we are at euro dollar. It's in the same range, hugging the 109 level. We do see some kind of narrowing range here, okay? You see here lower highs and here higher lows. Basically, the pair isn't going anywhere fast. Strong support 107.80, resistance 109.50. What can move the euro? Yesterday we had Draghi and it didn't move the euro. It's mostly US events now. Expectations for the ECB and events further on this week. Okay. Zika and GM-modified mosquitoes. Is there a connection? Yeah, there might certainly be a connection. Anyway, there's so many things in this world. Not everything we eat and breathe is healthy, of course. Let's continue. Euro dollar is a bit stuck. We'll talk about what moved it beforehand. The pound is on a recovery path. Here we see the pair moving higher, settling above 143.65. The next level of resistance is 144.80. Okay, we've seen it make a very nice move to the upside. Yesterday we had UK manufacturing PMI beating expectations, contrary to China, contrary to the US. It was some piece of good news from the UK. It might be a false dawn, but nevertheless, this is one of the things pushing cable higher. Okay, so this morning we're seeing some weakening. In general, this morning we're seeing sort of a risk-off sentiment. That means the yen is a bit stronger, and so is the euro, but it isn't so significant. All in all, this is the move by the Bank of Japan, deciding on Friday morning to announce negative interest rates in Japan. Okay, so they didn't enlarge QE, but they did announce a negative rates, and now we're seeing dollar yen slide. 120.65 is the current level, keeping still a safe distance from 120. But there are a few reasons for this fall in the yen. Okay, one of them is in dollar yen. One of them is weakness in the US dollar. The second one is some risk-off flows. Okay, stronger euro, stronger yen, weaker oil prices that we're seeing this morning in markets. And the third reason for the fall of the yen is that there are also a bit doubts that the Bank of Japan really made the right move, or can really implement it, or it will really have any effect. Okay, because they were a bit late to act. Only 5 out of 9 members voted for it. Okay, the narrowest majority possible. And there are a few doubts about the Bank of Japan. They might need to do more in the future to keep supporting the pair to weaken the Japanese yen. All in all, we're at higher levels than we've seen before the move, but we're not at. I would have expected the rally to move a bit higher. Okay. Anyway, we talked about the euro, the pound. Well, for the yen, support is 120, resistance still 120, 150 despite the spike above the level. Okay, dollar CAD. Here's where things become a bit more complicated and interesting. The Canadian dollar made an excellent recovery. Okay, as you can see here, this sort of head and shoulders. This is where the Bank of Canada decided not to cut rates. So we had it fall from the highs, and then oil prices began recovering. And then last week we fell under 140. And now we're battling with 140 once again, despite the fact that oil prices are falling once again. Okay, so we had oil prices spiking back up to 34.80, and talks about OPEC and non-OPEC members collaborating to cut production and sort of lift oil prices from the bottom. And that also helped the Canadian dollar. That helped oil. But it looked like, as Dale Pinkert said in his show, a short squeeze. Okay, so this is what we had the spike last week in oil. 34.80 is the high level. Then we had it struggling, finding here, eventually falling below support at 32.20. We're currently in 31.11, still a safe distance from the round number of 30, which has been very, you can see it's a clear separator of ranges for WTI crude oil. But what's going on with oil? So it's very hard for OPEC members to make some kind of agreement. We already know that Iran is not listening to Saudi Arabia, of course. These two countries are at loggerheads, okay? Over Syria, over many other things. And Iran just came back online, so they don't want to cut oil, okay? They just want to produce more. They need more money. Other members want Saudi Arabia to cut. Now, it's not only OPEC, it's also other members. So Russia is in trouble. They also want to cut production, but they don't want to cut alone to help to see other countries make more money, okay? So there's been talk that Saudi Arabia and Russia, despite the conflict in Syria where Russia supports Assad and Saudi Arabia is on the other side, despite this, they might decide to cut production. Perhaps other countries will join. But it's unclear if we'll have any kind of meeting between these countries. It's unclear if we'll have a meeting with other OPEC members. So it's quite a mess. And in the meantime, the reality on the ground is that all countries are producing more oil than expected. There is some kind of slowdown in the United States, but not enough. And Russia is still pumping at full speed. Saudi Arabia is pumping at full speed. Inventories continue rising, so it's still, the reality on the ground is that there's too much supply and not enough demand despite the falling oil prices. Eventually, when prices remain lower for longer, it means higher, demand will eventually pick up and supply will eventually fall. But these eventualities are not happening that fast, okay? Let's go back. I see a question here. It's not counting the wicks, but closing price is 40. Okay. Last 40 weeks, I see euro dollar weekly chart, roughly an 800 pip range. Yeah, in the last 40 weeks. Okay, but if we look at euro dollar in the last 8 weeks or so, I mean, since Draghi decided to keep they did decide to cut rates, but it was not enough it wasn't as expected. Here's the big Draghi spike on December 3rd. I hope you can see this spike. Since then, we've had it slide a bit down, then a bit up. 110.70 was the high, fell a bit lower, then went to 110, then fell to 107.10, and then ranging in a very limited range between 107.80 to 109.30, 109.50 in the better days. All in all, since December 3rd, we're seeing very narrow ranges in euro dollar. I'm waiting for this to explode, but the wait is long. Okay, this is one of the more stable pairs in comparison to what we've seen with the Australian dollar, the Canadian dollar, the pound, even the yen. This is quite a frustrating one. Okay. Thanks. Everybody missed you yesterday. Day was not the same without you. Hope you had a nice break. Yeah, I had a nice break in Seville in the southwest of Spain, and now I'm back in Barcelona. And yeah, yeah, it's a mess. Euro dollar building a downward channel. Yeah, you can look at it as a downward channel, but I would see it more as a triangle, okay? As a wedge. Basically, it's quite a messy thing, euro dollar, okay? Let's continue with more charts. Dollar CAD. Why doesn't the screen refresh? Anyway, have you a comment? Lower oil prices are seeing more money in consumer pocket, increasing car sales, more miles driven, consumer purchasing bigger vehicles. Yeah, that's a long-term effect. Also, oil did not react violently to the China data earlier this morning, which is a good sign. Yeah, well, oil is falling in general from the high seen last week, but not anything crazy. Good morning, everybody. Anyway, for dollar CAD, let's look at a bit at the levels for dollar CAD. Yeah, so 139.10 is support, 140 is a battle line, 140.50 and 141.70 are the lines that I see, but no, sorry, it's 141.50 would be a better line. The Canadian dollar is showing a lot of strength in comparison to the recent fall in oil prices from the highs of last week, okay? Aussie dollar. In Australia, we had a rate decision tonight, this morning. For some of you, it may be afternoon. So the Aussie dollar dropped a bit on the RBA, but it's more related to this risk-off atmosphere. The RBA decided not to change rates, which was widely expected. There are basically two things playing for the Australian dollar. Everything looks good at home. Inflation looks healthy. Employment is rising, unemployment is falling, but everything looks good at home, but doesn't look so good outside with the slowdown in China. All in all, the RBA left a balanced message. They might act, they left the door open to cutting rates in the future, but it's a very, very mild statement. It's not really a commitment. Things are not doing that bad. The RBA, of course, would rather keep the tools in the shed, as they say. Okay, so it's quite balanced. Support is at 70.50. Resistance still at 71.50, I would say. So it's a more or less 100 pip range. We're currently in the high range after the risk-on atmosphere we've seen last week, but currently in the last few hours, there is also some pressure on the Australian dollar, similar to the Canadian dollar and other currencies. Okay, the Kiwi also remains in a high range, also a bit sliding. So far, nothing this week from New Zealand, but we have more interesting events later on. 65.80 is resistance, 65 is support. Okay, dollar Swiss on high ground, 102. Resistance at 102.50. Sorry for that. As you guys may well know, I'm not a fan of the Swiss franc because there's too much intervention by the Swiss National Bank anyway, but the franc has been weakening against the euro, therefore also weakening against the US dollar. Euro Swiss is on high ground, 111.20. Look how 107.60 worked as a line in the sand as support line for the Swiss National Bank to push the pair higher. Since then, it's been moving to a higher range, trading in range, consolidating, moving higher, doing the same, and again and again. The highs so far today, well, we're close to the highs, but we've seen yesterday higher ground, 111.60 or so. I suspect there is intervention. I have no evidence of that, but they might. The Swiss National Bank might be working in markets. Euro pound is falling a bit because the pound is on a comeback line and the euro is stuck in range, so 75.70, more or less still in the lower part of the recent range. 75.45 is support, or perhaps a bit lower. Here, 75.40, 76.50, or 76.60. No, let's modify our lines just a bit. Yeah, this is resistance. Okay, quite a nice range for Euro Pound. Currently a bit in the low range. All in all, it's off the highs. 77.40 is strong resistance over there. Okay, Euro Yen. 131.60. Of course, it had a very clear trading range between 127 and 129 until the Bank of Japan announced its negative deposit rate on Friday, and this sent the pair much higher. It's off the highs already, 131.60, sliding a bit this morning. All in all, this is a safe haven pair. So after the knockdown from the Bank of Japan, we're more steady now. Okay. Pound yen 173.77. Also here, the pair managed to recover mostly thanks to the Bank of Japan's negative rate, but also because the pound is on a recovery path. Currently a bit sliding in range, 0.5% lower this morning, 80 pips lower, 173.77. Resistance 175, support at 172. Okay, the question here, how would the SNB intervene? How do they create such big moves? Are they selling bonds or buying stocks or just injecting money into the economy? No, they're directly intervening in currency markets, buying euros and selling francs. They're doing it through a series of commercial banks that work with the ECB in various European countries. And I think they're also buying bonds, German bonds, but it's not stocks. It's mostly bonds and just cash, just creating new francs and buying euros. If you look at the map, Switzerland is fully surrounded by Eurozone members: Austria, Germany, France, and Italy. So most of the trade is with these countries. Of course, not only with these countries, but with quite a few others. But this is what they care about most. Okay. Okay, so we talked about all the pairs I usually cover. Of course, your questions about other currency pairs are more than welcome. Let's talk a bit about events that happened in markets since Friday. And Friday we had a busier day than yesterday. Well, also yesterday was busy. So let's begin from the top. Eurozone inflation came a bit slightly better than expected, okay? It came out, well, core inflation came out at 1% against 0.9, so it's a slight beat. Headline inflation came out at 0.2, as expected, after we had sort of as expected figures from Germany, a small miss from Spain. Anyway, no big surprises over there. Inflation just doesn't look good at all. In the United States of America, we had GDP coming out at 0.7, a small miss, but it had good internals. Let's detail a bit about this. This was the first release of GDP for Q1, okay? For Q4 2015, for the end of 2015, the previous year. Expectations stood on between 0.8 and 1%. The actual figure was 0.7. It's an annualized figure, so it's not quarter over quarter. That means that if you compare to British figures, it's a rise of less than 0.2% quarter of quarter. Very poor growth, under expectations. But it wasn't totally unexpected, especially after the terrible durables goods orders figures last week. And the internals were a bit better. One of the things that pushed GDP down was inventories, okay? There was a drawdown in inventories, and that means that took off the gross domestic product. What happens when inventories go down? They eventually need to go up, okay? When there's depletion, there's replenishing, and that's why it sort of gives us optimism for Q1. The second positive figure was that consumer expenditure was actually higher than expected. It was expected to stand at 1.8. The actual figure was 2.2 annualized. not too exciting, but the U.S. consumer is doing its job, her job. They're buying as much as they can, I guess. So these figures are, of course, they gave us sort of a silver lining. Okay, let's move on to other figures that we had on Friday that are worth mentioning. Well, Canadian GDP came out 0.3 as expected. It's more oil prices that move the Canadian dollar, even though the loonie has shown resilience to the recent slide. Well, something I didn't write here was the final consumer sentiment from the University of Michigan in the United States came out slightly lower than expected. On Monday, we had mixed Chinese PMIs. So the official one came out worse than expected, but the unofficial one, the Caixin manufacturing PMI, came out better than expected. So it's sort of a mixed picture. Managed to keep things balanced, okay? And in the UK, we had manufacturing PMI coming out better than expected at 52.9. Okay, that was some good news. In the United States, yesterday, the manufacturing PMI was worrying, okay? Why was it worrying? First of all, the headline figure came out worse than expected, okay? We had 48.2. 50 is the limit between growth and contraction. It came out for, I think, the third or the fourth month under 50 and worse than expected, 48.2. The second worrying thing came from the employment component. This came out at 45.9 points, which reflects significant contraction. Okay, it's not around 50, it's significantly under 50. It implies that in the manufacturing sector, jobs were actually lost in the month of January. Okay, it's the first hint for the non-farm payrolls on Friday, and it's not a good one. Tomorrow, Wednesday, we have ADP non-farm payrolls and the services sector PMI. Services sector is bigger than manufacturing, but on the other hand, it's in the manufacturing sector, they actually produce stuff. Okay, so it's also important. Okay, let's continue. I see we have a few questions. I'll get to them just after finishing this. Draghi had a speech yesterday, a testimony in the European Parliament. He didn't say anything new. They're, of course, ready to act in March. Another member, Viskor or Novotny, they said that they will reconsider monetary policy in March. This is the same line we heard from Draghi a few weeks ago, so it was nothing new over there. And in Australia, well, we talked about that. No change in Australia. We covered that, okay? Questions here. Well, regarding the S&B members of the ECB must love them. No, regarding, also the Eurozone, also the European Central Bank, the ECB wants a weaker euro. So if the Swiss are buying euros and strengthen the euro, the ECB doesn't like it too much. Of course, Switzerland is a small country and the Eurozone is huge, so there are so many other factors moving euro-dollar, so it's not that terrible for them. Another question here with the Bank of Japan decreasing the rate is minus 0.9, do you think this will deter investors from using dollar-yen for carry trades like Kiwi yen, or are investors not impacted due to minus 0.1 not being for certain money? Investors and see. No, I think it'll still. The idea, yes, is that it's supposed to weaken the yen and deter investors from borrowing in yen or sorry. No, it should help the carry trade because it'll be even cheaper borrowing in yen and even more punishing to keep yens in Japan. So it makes sense to buy Kiwis, okay, or other currencies or other assets. They're sort of trying to combat the safe haven flows. With the weak fundamental data coming out of America, creating a weaker dollar, will this help the Fed achieve the inflation target? Yes. A weaker dollar helps push inflation higher. It doesn't have such a big impact. And also other countries are weakening their currencies, so it's not sort of a clear-cut thing. Okay. The US Federal Reserve does not like the strengthening of the US dollar. They don't like, and I guess they're a bit worried that oil fell too much, but they see both things as transitory. Okay, they see so far, yeah, they might change their mind. So far, they see the fall in oil is a net positive for the US economy. They see oil giving consumers more money in their pockets to spend it elsewhere. We're still not seeing that. The savings rate is actually higher. It's a data figure released yesterday that personal savings are higher, income is higher, and spending is not moving too fast. But eventually, everybody expects this will happen. On the other hand, the negative from oil prices is that, well, the reason for the fall in oil prices, the sort of the root, comes from the United States, from the shale industry. So if you have less jobs in oil and mining, then you have less spending, especially as these are high-paying jobs. So, and regarding the US dollar, actually, that's what you asked. So it also leaves more money in American pockets to buy perhaps US manufactured goods and not imported goods, because imported goods are cheaper. On the other hand, it pushes inflation lower, and this could create deflationary expectations, okay? This is what they fear in Europe. This was what happened in Japan. Consumers expect prices to fall. They don't buy. Factories produce less, fire people, less jobs, less consumption. This is not what the Fed fears at the moment. But of course, they want to reach their target, and they're a bit frustrated, as they expressed in the last two meetings about inflation. Okay. Hope this sort of answers your question. Let's look again at the charts to see if we haven't missed anything of importance, and talk about today's events. Yeah, euro dollar still at 109.06. Okay. Let's talk about today's events, starting from what we have immediately after the show. Refresh the calendar. Let's go back to the slide. Here we are. Okay, at 8:55 GMT, that means in less than half an hour, we have German employment data. Where are we here? Why are we in last week and not this week? Okay, here we are. So first of all, some news from Spain. The employment change was better. The unemployment change is here in Spain. The number of jobs, number of people joining the jobless, number of people losing their jobs rose. This is a very seasonal thing. It's wintertime and there's lots of tourism here in Spain, but it was expected to be higher at 71.2, and it's actually only 57.2. Okay, but Germany is a bigger country. It has more impact on the euro. After a drop of 14,000 unemployed, okay, we're expecting another drop of 7,000 jobless in Germany, and the unemployment rate is expected to remain unchanged at 6.3%. As the graph shows, Germany suffered a rise in the unemployment rate in the financial crisis, but it never went too high, around 8%, and since then it has been falling, getting stuck, and then resuming its falls, okay? At 9:30 GMT, we have the second PMI out of 3 in the United Kingdom. No big changes expected. It's from the construction sector. The strongest in the US economy, expected to remain basically unchanged from 57.8 to 57.6. Stronger than manufacturing and stronger than services. It's also a smaller sector. The big PMI comes out tomorrow and it's the services PMI. Okay. At 10 GMT, we have the Eurozone unemployment rate. It's at 10.5, expected to remain unchanged. Here it rose. The beginning of the crisis got stuck around 10%, and then the second Eurozone recession, it went to much higher levels, around 12%. Since then, it has been falling, and now it's at 10.5%. In the recent releases, it has been coming out better than expected. Okay, In the United States, we have sort of third-tier figures, the ISM New York Index, the IBD TIPP Economic Optimism figure, which is expected to remain unchanged. And then the focus moves to, forgot one thing, the Eurozone PPI Producer Price Index, released together at the same time with the unemployment rate. It's expected to show a fall of 0.6. It's sort of a second-tier inflation figure. I think the unemployment rate today is a bit more important for euro-dollar than the PPI. Anyway, these are not top-tier figures like we had last week with the inflation, okay? And then the focus moves to New Zealand. We have both the, at some time in the afternoon, okay? We have the GDT price index, which is the price of milk. Very important. In the last two auctions, the price fell, so it's not good news. And at 9:45 GMT, the employment figures from New Zealand, very important for those trading the Kiwi. They're released only once per quarter, okay? Unemployment rate in New Zealand has been grinding a bit high from previous lows. It's expected to rise once again from 6 to 6.1. And the employment change is expected to, be positive actually, rise by 0.8% after a fall of 0.4 last time. It's the figure, it's the release for Q4, the first and final, and it's a quarterly figure, not a monthly one. Okay, I see a question here. Did I hear correctly that we might hear the final deal on Brexit tomorrow or sometime this week? What are your thoughts on the possible outcome and how it could impact your pound? Over the weekend, something I didn't mention. It's a bit in the back burner. The UK's David Cameron and the EU's Donald Tusk are in negotiations over a better deal for the UK and the Eurozone. According to what I've heard, there's been some progress, but there's still a way to go. So it's sort of mixed headlines over there. We might have a deal this week, we might not, I'm not sure. I can tell you what it means for the pound in general. David Cameron wants to get rid of this thing, okay? He went for this Brexit referendum because of pressure in his own party, the right-wing side of his party, to get rid of the EU. And not only his party, to sort of provide an answer to UKIP, to Nigel Farage and those guys, okay? Basically, David Cameron, which represents big business in general, nobody wants a Brexit, okay? So they want to get a deal as fast as possible and to show the British public that we got a deal and it's a great success, and to have a referendum as soon as possible to get over with. Another thing, except the deal itself, is to hear perhaps in the EU summit in March, some limit on refugees. Currently, Germany has no limit on refugees. Once they say, okay, we have a limit on refugees in the Eurozone, in the European Union as general, it will be easier for Cameron to convince the public against leaving the EU. I believe that the UK has more to benefit from staying in the Eurozone than from leaving, because even if it leaves, it's still the main trade partner and will have to adjust to the laws made or regulation made in the Eurozone. So why not participate in this and not be on the outside? Of course, the reason is also to be on the outside. It's a very complicated topic, but anyway, I think most people will go conservative in terms of they will not change what they're used to, okay? For the pound, it means until the referendum, we have uncertainty. That does add negative impact on the pound. And once we have the results, assuming they will be a victory for the in campaign, it'll be a relief rally for the pound, okay? Of course, if we have a surprising decision on a Brexit, then we could have a big plunge in the pound. So that's sort of about Brexit a bit. About the EU referendum, there are talks that it'll be somewhere in the summer or in September. Well, September is also could be considered summer. So we're talking about July, August, or September. But the rumors are changing all the time. I don't follow the British news closely. What I did tell you, I think, does show I know something about it, but I'm not following the day-to-day developments. There were busy negotiations over the weekend, and we still don't have white smoke, but as far as I know, there has been some progress has been made. Okay. Yeah, so if you have any news about that, you can share with us about a deal tomorrow. Let me check out my the British press a bit. Not British press is talking mostly about the primaries in the United States of America. Anyway, let's continue with what moves markets a bit more. We talked about New Zealand, and half past midnight GMT we have Australian building approvals and the trade balance should be positive and support the Australian dollar, and then the Chinese services PMI, the independent Caixin measure, could be negative for the Australian dollar because China does not look so good. Okay, so we have sort of a mix of events today. Tomorrow we have a more crowded calendar. Okay, any questions? Also, we'll talk about all the events this week, which is a busy week. Euro dollar is rising just a bit. Pound dollar is weakening. Dollar yen relatively stable. Dollar CAD is higher. Aussie dollar is lower. All in all, we have this morning a slight, at least during the show, a slight risk-off environment. Okay, what's risk-off? Stronger euro, stronger yen. Weakness for all the rest. Weakness for oil. Weakness for other commodities, stocks. Only the safe haven euro and yen are striving. Okay, any questions? Maybe we'll talk about more events this week. Let's begin from the top. Chinese PMI came out yesterday quite mixed, better on the independent one, weaker on the government one, which is surprising. Usually it's the other way around. ISM manufacturing PMI was bad. Weak employment was very worrying for the non-farm payrolls on Friday. The RBA in Australia left the rates unchanged. Australian dollar is weaker, but not really because of the RBA. Today we have a focus on New Zealand with the milk and employment figures. Tomorrow is a very busy day for you in the, for markets, because we have key top tier, first tier US figures, ADP non-farm payrolls. It showed a better correlation with the NFP recently, so it's a big hint. And the ISM non-manufacturing PMI, a report for the services sector. Everything is for January, of course. On Thursday, we have the UK rate decision. Will we have 9 members voting against the rate hike this time? That's the big question. And on Friday, the US non-farm payrolls and the Canadian jobs report. The first week of the month is a very busy one, but I must say also last week was quite busy. Yeah, that's what we have this week. Okay, any questions? Perhaps we'll begin the wrap-up for today. Oh, I see a question here. What can move euro dollar today after the employment data? During the rest of the day, it's mostly in market mood. It's mostly things that are happening in markets. Okay, it's the yeah, all in all, we are stuck in range. No key US figures today. Also, Eurozone figures are not that important. So it's mostly mood in markets. Okay, question. I think the NFP will be weaker. All the temporary December hires went back to college or were let go. Yeah, it's supposed to be seasonally adjusted, but yeah, it could be weaker. Last year we also had a superb report for December, and then January. Well, I think it was also okay, but not, of course, not as good. Okay, expectations are, by the way, for a lower figure. Let's just take a quick look on the expectations for Friday. Yeah, non-farm payrolls expected to drop from 292 to 190. Okay, so the expectations are also a bit weaker. Unemployment rate to remain at 5, and average hourly earnings is plus 0.3. Let's see how things materialize. A question here: can market would be enough to break the wedge in euro dollar to the upside or have a strong move, given the present risk-off scenario? I don't know. I don't think it's a very strong sentiment. All in all, we're very deep into the range, entrenched. So we would need some really big news to come out. We know that things do happen in markets, but at the moment, I see euro dollar very much stuck in range. Okay, begin the wrap up for today. This is the wrap up for Tuesday, February 2nd. We're back with the show. We had quite a bit of movement in markets. In general, we had a weaker dollar across the board, benefiting the pound and CAD more than any other currencies. Oil resuming its slump. A bit of news from the political scene in the United States, with Trump being a loser and the party in the Democratic Democratic Party is tied between Sanders and Clinton. Zika virus is grabbing the headlines as well. But let's talk markets. Eurozone inflation is a slight beat. All the options are open for the ECB in March. US GDP is mixed, a slight miss, but internals were a bit better than expected. Canadian GDP, as expected, Canadian dollar moves a lot more with oil, but showing some resilience, showing some strength despite the recent fall in oil prices. China is still a mystery with mixed PMIs. UK was better than expected. It supports the rally in the pound. Okay. Manufacturing PMI in the United States was very worrying because of employment. The employment figure sort of shows that there's contraction in the employment in the manufacturing sector. Okay, the RBA made its decision, no change and no real impact on the Australian dollar. The Australian economy looks good, but China is worrying. That's sort of the bottom line. Okay, let's look at a few charts. Euro dollar hugging 109, 109.15 at the moment, 107.80 and 109.50 are levels to watch, but we're in an even narrower range over there for quite some time, actually from mid-December, early December. The pound is on the move, currently sliding to support at 143.65, resistance 144.80, support 142.40, 142.30. Okay, we have the construction PMI from the UK to move the pound today. Should be interesting. The yen sliding from a dollar yen sliding from the highs, 120.60. We've already been at higher ground after the Bank of Japan surprise with setting negative interest rates. So, but still keeping a safe distance from 120, 120, is resistance. Dollar CAD very close to 140, 140.33, rising together with the slump in oil prices. So dollar CAD is off the lows because oil prices began falling, but it could have been worse for the Canadian dollar. 141.50 is resistance, 139.10 is support. Australian dollar after the RBA 70.65, 70.50 is some kind of support, 71.50 is resistance. Okay, we'll probably hear more analysis about the RBA later today. Kiwi dollar 65. Oh, now it's beginning to slide. It's a big day for the New Zealand dollar because we have milk prices and also the employment report. It's a quarterly report from New Zealand, so it should be a big market mover for the Kiwi. Okay, 64.15 is support, 65.80 is resistance. Okay, let's talk about the events for today, even though we mentioned quite a few of them. Just after the show, German employment data. expected to show an improvement in the German economy. Construction PMI in the UK, usually a market mover, even though tomorrow we have an even bigger market mover for the UK, the services one. Eurozone unemployment rate at 10 GMT. Let's see if it provides us with another positive surprise with the fall. Then we have only second-tier US figures, so the focus moves to New Zealand, with the milk auction later, employment data, and a few figures relevant for Australia at night. Okay, so that's the wrap up for today. I see another comment here. Yeah, Super Mario has to sort that one out. Yeah, Super Mario is dovish. Mario Draghi, president of the ECB, he wants more action. He wants a weaker euro. He wants more support for the Eurozone economies. He also wants governments to do more. He doesn't get real support from governments. He also doesn't get real support from some of his members that do not want him to do anymore. But we'll see that we have a meeting of the ECB in early March. Okay, so that's it for today. Good to be back. We'll be here tomorrow as usual. Thank you very much, everybody, for coming. Thank you very much for the great questions. Guess that's it for today. Wish everybody a safe and successful trading day, and see you tomorrow. Thank you, and bye-bye.